Hello, everyone. This is another market moment with Randy Williams Gurian. Hey, thanks for tuning in today. It's Friday, February 11th, and the markets have really had a tough time in 2022. Started off the year with a lot of weakness, and that's carried over into February. And now the market seems to be really obsessed with what's going to happen with the Fed and what's happening with inflation. We got some very startling news on inflation this week, and I think the bond vigilantes came out and have pushed up rates on the long end of the curve. Right? I know they have, and the Fed has. There's whispers that the Fed may go to 50 basis points in March, the first rate hike we've seen in, I think, over 3 or 4 years, and that has rattled everybody's nerves on Wall Street. But what I'm here to tell you is I think that that's getting priced into the market, that these rate hikes are getting priced in. And I can tell that because we're not getting a lot of additional selling. We had a big sell-off in January, as I mentioned. Typically what happens if it's a market correction is the market will want to come down and retest those lows. So that's still probably in the cards. So I'd expect that to happen maybe in the next 1 to 2 weeks. If it retests the lows and those lows are not violated, then I think the market can safely move forward. Because I think what's going to happen is with these interest rate hikes is I think they're going to take effect. I think there's going to be a large effect because there's a large amount of debt. And when they take effect, it will slow down the economy, and hopefully some of these price increases that we've all experienced will start to mitigate. And if that happens, then I think the market gets rolling again. And the other thing the market has going for it is earnings were really good in the fourth quarter. I think they're going to be really good in 2022. And so even with a little bit higher rates, I think we'll see higher stock prices by the end of 2022. I don't think this year is going to be anything like the last 3 years. We were pretty spoiled with these big run-ups. And now I think you just have to be a lot more careful with your portfolio. And if you're going to hold equities here, you want to hold the ones that you really know, love, and understand. And so that's the strategy we've used over my career for my clients, and it's worked out. So we don't tend to get into the mode of selling a lot of things here when we go through a correction. We tend to do some rebalancing of portfolios and possibly some buying of the stocks we love. And then on the flip side, when the market's really good, we try and do some rebalancing as well, maybe take a little profit. So, it's a hard time for investors right now. I think a lot of people over on the NASDAQ that were playing the high flyers got really hurt. And that's a good thing, though. You got to clear that excess out for the market to move forward. And again, I don't think this is a bear market. So a lot in this message today. We also have the Super Bowl. We have Valentine's Day on Monday, if you forgot. You want to try and shore that up. So hopefully you enjoyed the video, and I hope it's a good Super Bowl, as everybody else probably does. And I hope they can put an end to the Major League Baseball lockout, because most people know, I'm a huge Mariners fan. All right, so have a great weekend, and we'll see you hopefully next week.